Hey everybody, Jeffrey Beamer here, Senior Market Strategist over at ewotrader.com. Today we're looking at, a full slate of things. Today we're going to start with reviewing our trade from last week. We had a little trade on Kroger that we're going to take a quick look at, and then we're going to look at headlines as well as some charts. And then we'll get into discussing some economic events and finally closing out with a trade of the week this week and what we're specifically watching for the week this week. So let's jump right into it. Taking a look at Kroger. This is one of those things where Kroger historically has been a very quiet stock through earnings, okay? Just doesn't do anything. And then they begin these discussions of mergers with Albertsons. The feds crack down on that, saying, no, that's not going to happen. You think the news is all the way baked in, and so you put on what historically is a winning strategy going through earnings, and bam, the stock gaps up, starts to run, and we found ourselves covering the trade pretty quickly first thing in the morning for a small loss. So anytime you put on a trade, you want to think about, what if I'm wrong on your analysis, okay? And in this case, it was a quick exit. I tried to mark there about the price that we exited the trade, and that resulted in just a $49 loss on the trade. That would be $49 per spread on the trade that we placed last week. So, we've had winner after winner after winner here week after week, and actually taking a very small loser is just part of the plan. We don't like taking losers, but when we do, we like to lose small. So let's just go ahead and move into our headlines of the week. We got lots going on here. And for all these things going on, there's not really many headlines. The market is really taking a breather ahead of these big economic announcements that we have this week. There's really two that the market is zeroing in on. But another big headline, Bitcoin sets a new record. Prices are soaring on the cryptos. Cryptos are still considered, they're in the very early stages, but we consider these as alternative investments, non-traditional alternative investments. And as they become more standardized in the markets, you'll see more money being allocated to them, but only up about to 10 to 15% of portfolios can be allocated to alternative investments for most every investment advisor. And finally, earnings season continues this week. We have over 460 stocks declaring earnings. So busy week as we kind of stroll through March. Lots of good stuff coming up. Let's jump over to the charts and see where we're trading today. As we start with the broader market, taking a look at the Spider Index Trust, we see the stock, taking a breather today. It is just churning up. This is for anybody who's trying to short the market. This is death by 1,000 needles. Okay, the market just continuing to grind higher. What you see here is I have a trend channel that is outlining the trend, obviously, and the trend is higher. Now, if I take that channel off, you'll see two lines here, okay? One light blue line that disappears when I move my mouse over it, and then the other, that's my 10-period moving average, and then the red one here that lights up is my 21-period moving average. And when I had that trend channel on, you see the lower part of that trend channel was just riding up that 21-period moving average. Quite interesting how much that 21-period moving average comes into play. Okay. Now, I do like to look at these markets with two types of candles, a standard candle and then a hike and a she candle. And just because here we get a red candle does not indicate the end of a trend. We have really, it's an embedded uptrend right now. I would need a couple of things to happen for me to worry about going short. That's a continued series of red candles with no wicks on the top and breaking down below that channel, which right now corresponds to my 21-period moving average. Now, jumping over to the Qs, the NASDAQ, we have a similar situation here where the market continues to grind higher. However, the Qs, it's a little different. They have actually been trending sideways now for about 2 weeks. Okay. If you look at where we're trading right now and just move across, you can see lots of price action here over the past 2 weeks and really into a third week if you get back here to this previous pivot point back here. Now, what's interesting about this pivot point, and let me draw it out for you, starting right here off of this candle, if we bring it across, previous resistance becomes future support, and we are now testing that support here with these Heiken-Ashi candles. Let me bring it over then to regular candles, and you can get an idea now how choppy this market has been. And we're sitting right on the 21 period moving average, as well as some resistance there on the Qs. Now, interestingly enough, as we continue to push forward, looking at the Russell IWM, it's continuing its grind higher here. Still has not violated. Let me extend my trend line out a little bit here. Okay, we are at, you see where these two are now crossing. This is an area of convergence here. And we should see really a move either sharply higher or sharply lower. It could trend sideways, who knows? But typically when we see this type of pattern, we get a move that is either higher or lower. Let me bring in Heiken-Ashi one more time, and you can see the majority of green candles just marching higher. Again, the occasional red. If we move up again tomorrow, we'll just get another green, and the trend will continue. So the point here is no bearish signal right now. Markets are continuing to grind higher as we enter another week of earnings and some key economic data points. All right. So let's move on now to look at oil real quick. Oil is beginning to roll over. It's made this pivot high here. It bumped its head up against some significant resistance up here at the $75 level and just could not hold it. Wanted to bring in more data for you here. So oil is beginning to make this lower high here, this lower pivot high, and trading lower. If we do break below this 21 period moving average, which you can see here, then my target would be back down here around that $67, $68 level. And I would definitely be putting on a trade targeting that. So the way this is setting up here, this is called the setup. We don't have a signal or a trigger to go short yet. This is just the setup. These are the very early stages of a potential move. And really, I would be neutral on oil right now, specifically through USO, unless it breaks 75 to the high side or breaks down below this support area of support to the downside. So it's getting close, but we may see a trade here on USO coming up pretty quick. All right. Now, moving on to the metals, interestingly enough, boy, look at gold here. Now, this is the Heiken-Ashi candles. All right. You can just see these big, strong candles, big green bars, no wicks on the bottom. This is over almost a 7% move off of these small candles back here. Let me pull in the traditional candles here, and you can see gap, 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 up, up, up we go. And boy, is this trend just going to continue? I thought earlier today that we might be stalling out here at this 200 to 202 level, but no, another good up day. Gold's up 26 basis points right now. It could actually close up, I don't know, about 50 basis points if we have a strong, decently strong day. But look at that vertical move on gold, and silver is not to be outdone as we jump to silver, up over 7% this week itself. Same type of pattern. Interesting that, all the cryptos are rallying, gold, silver's rallying. Interesting that USO and crude oil is not right now, but I wouldn't be surprised if those follow through as we're looking for some non-traditional hedged investments that kind of have a mind of their own ahead of some potential stock market volatility that's coming up. Now, speaking of which, let's move over to the bonds. Well, let's begin with TLT. This is our long end of the curve. Let me clean this chart up a little bit here. Let me just remove all of those because I had anticipated a little lower move back here. Did not happen. We rallied up, but notice what's happening here. We're starting to put in this little pivot high here that could be a lower pivot high. Okay. And then markets start to trend lower. That means higher interest rates. We are already seeing that in the bond market. Rates are up a little bit, especially on the short end of the curve. Now, what you're looking at here is TLT. This is the 20-year Treasury. If I jump over to the short end of the curve, which is SHY, this is the 1 to 3 year Treasury bond ETF. And you can see kind of the same thing, but a more defined drop here, down about 7 basis points on the day. That this is kind of contributing to the divergence that we're seeing between short-term rates and long-term rates. I'll get to that chart next. In fact, let's get to it right now. We have this inverted yield curve that we have been fighting for over 18 months now. What's interesting about our current level of 1.37%, that means short-term 3-month rates are paying a 1.37% rate higher than 10-year bonds. Okay. This is an unhealthy bond market. It's been that way for quite a while. But what concerns me here is that we've started to widen that spread again. We were at 1.23 last week when I showed you this chart. We're down at 1.37. That's a pretty significant move. Okay. And it's really when we get down to these significant divergences about 1.50 and beyond that we see some stress on the banks and some big potential problems. So we'll keep an eye on the banks, especially the regional banks, as well as this spread. Now, interestingly enough, mortgage rates have not been following this pattern. I showed you this chart last week, and we were hovering about 7.12% on a national average. And now we have dropped down on the 30-year mortgage to an average that well below 7%. We're about 6.8, 6.7% on a national average. And that is going to keep a good, strong base to housing nationally, whether you're buying a new house or looking to sell yours and then refinance into a new home. Then rates aren't too far out of control, or you're not going to get those 2.5-3% numbers anymore in the near future, if ever. Okay, but 6%, 6.5%, 7% is not extremely high for bonds. In fact, it's kind of in our average there. So that's a look at the bond markets. Now, jumping back to stocks and kind of start talking about this week a little bit. We talked about the S&P and the NASDAQ, the broader indexes being in uptrends, and they're grinding higher. But we have a slew of earnings. As I mentioned, we have over 460 stocks declaring earnings this week, along with some pretty significant economic announcements. So let's start with today. As you can see, we have a handful of large cap names that declared today. Now, what you're looking at is a chart of stocks that are anticipated by their market cap or significant options volume. Okay, and so you're not going to always see maybe every name, but here, notable today after market closes, Oracle. And then tomorrow morning, we possibly get some fireworks with that CPI, that awaited CPI number and inflation rate numbers coming tomorrow morning. And then a slew of earnings through before and after market close. We move into Wednesday, another slew of earnings, Petco and and Lenar and Dollar Tree, just to name some on Wednesday. And then Thursday, initial jobless claims in the morning. Again, a very highly anticipated number, along with PPI, producer price inflation numbers. That will be looked at pretty heavily. Then we get a slew of earnings. We get Dick's and Dollar General and Ulta Cosmetics, some big names there on Thursday. And then we close out the week on Friday with just a couple of small names declaring on Friday. So out of this list, I like to take this list because, again, this is either done by market cap or options volume. And so right now, today, I chose to look at Lenar. All right. And Lenar traditionally has a pretty low volatility through earnings, similar to Kroger. Okay. But just because we, had a bad trade on Kroger doesn't mean that every trade, in fact, we've been very consistent. A lot we're probably batting in the 80% range of winners when selling premium around earnings, meaning stocks that are historically quiet. Okay, we aren't doing these on AI stocks. We aren't doing this strategy on big volatile stocks. But Lenar has shown that it's actually pretty quiet going through earnings. In fact, I thought I had the number up, and it moves around 6% through earnings, okay, or less traditionally. I've seen 4%, I've seen 5, 6 at the highest. So with that, we're anticipating a similar move. And if you can see on the chart here, that last earnings event looks like we had quite a bit of volatility here. That's only a 6% move, okay, in the stock. Okay, so we're kind of accounting for that. What we're looking for here is volatility crush, where the expensive options that we're selling become much cheaper really quickly, and that gives us a big profit in a very short period of time. You can go back through our channel and see other trades like this that have been successful. We do this on a regular basis, and in fact, if you'd like to know how we trade earnings, you can download our free guide, okay, our free guide at ewotrader.com/straddle. Okay, a lot of times we do straddles and strangles, anticipating big breakouts. Here, we're actually selling a strangle and then buying a wider strangle, doing what's called an iron condor through this earnings event on Lenar. So tune back next week. You'll see how we did, along with the next set of earnings and earnings-related trades that we do each and every week right here. Hope you enjoyed today's session. We'll talk to you. Have a good trading week. We'll talk to you again next week. Everyone, take care.